Historically, gold has been averaging around 6% per year, which isn't bad, but it's nothing compared to the last 5 years where it's averaging closer to 16%. And even with the recent drawdown, it's still up on the year. But what's happening in the last 5 years? Why is demand for gold so high, and where's all this buying power coming from? Well, the answer is it's not retail investors panicking about inflation. It's not doomsday preppers holding gold in their mom's basement. It's central banks. The most sophisticated financial institutions in the world, the ones managing trillions of dollars on behalf of entire countries, are buying gold at a pace not seen since 1950. And they're doing it for one reason. They're strategically and very deliberately losing faith in the US dollar. In 2022, 2023, and 2024, central banks bought over 1,000 tons of gold each year. That's more than double what they were buying just a decade ago. The dollar's share of global reserves has fallen from 71% in 1999 to 56% today. And even though that doesn't sound like a big difference, we're talking about central banks. So percentage changes are the difference between trillions of dollars. And for the first time since 1996, central banks now hold more gold in reserves than US government bonds. This is the most important shift in the global monetary system since Bretton Woods, and almost nobody is talking about it. Now, there are obvious reasons why this shift is happening. Things like the US being over $38 trillion in debt, they're constantly printing money every year, and a lot of central banks are definitely worried that eventually these dollars they're holding may be worth a lot less. But to get a complete picture and really understand why this shift is happening, you have to go back to 2022. This was when Russia invaded Ukraine, and the West responded by freezing a large portion of Russia's foreign reserves. Basically, hundreds of billions of dollars that were held in Western financial institutions suddenly became inaccessible. And that was a shock because these reserves were supposed to be a country's safety net, money you could rely on in a crisis. But overnight, Russia couldn't touch it. And the only major asset they still fully controlled was gold because it was physically held inside their own country. And that distinction mattered because it showed something very important. Assets held inside the global financial system can be restricted, but assets held directly by a country cannot. And that sent a very clear message to the rest of the world, especially countries like China, India, and others, that in a geopolitical conflict, your reserves might not actually be yours unless they're outside of that system. So who's actually buying all this gold? And more importantly, why? Because when you look at the data, it's not random. It's central banks all over the world making the same move at the same time. Poland bought 100 tons in 2025, making it the largest buyer for the second consecutive year. And Poland's central bank governor has explicitly said that he wants to increase that number for national security reasons. Not economic reasons, but national security. Kazakhstan bought 57 tons in 2025, the highest annual buying on record for the country. The governor said publicly, "We want to stay a net gold buyer until global tensions ease. Not until inflations fall, not until yields change, until global tensions ease." That's a geopolitical statement. China officially has added 225 tons between late 2022 and 2023. And they've even extended their buying streak for 11 straight months into 2025. India has added over 200 tons since 2017. And in 2024, it did something shocking. It moved about 100 tons of gold from the Bank of England's vaults back to India. Think about what that signals. India doesn't trust keeping its gold in London anymore. This is geographically widespread. It's not just one or two countries making a bet. It's a coordinated, broad shift in how reserves are being managed. And when central banks themselves say they're buying gold, not just because of inflation or diversification, but because of concerns about sanctions and the global monetary system, what they're really signaling is a lack of trust in the current system, especially one that's so heavily tied to the US dollar. Now, at the same time, the dollar is not collapsing. It's not being replaced tomorrow, and it still makes up about 50% of global reserves. And it's still being used in 88% of foreign exchange transactions. So it's still the dominant reserve currency by a wide margin, but it's declining. In 1999, the dollar made up about 71% of global reserves. Today, It's down to about 56. So where did the rest of those reserves go? They didn't go to the euro or yen or the Chinese yuan. Despite all of the talk about it challenging the dollar, the Chinese yuan still represents less than 2% of global reserves. The big winner in all of this is gold. In just the last 10 years, gold's share of central bank reserves has gone from 9% to over 23%, making it the second largest reserve asset in the world, ahead of the euro. What you're seeing is a move away from dollar exclusivity. Central banks, they're not completely dumping the dollar, but they are adding insurance. Now, the strangest thing about this rally is that beside it, the stock market is near all-time highs. The S&P 500 is priced for continued economic growth, and AI stocks are valued like they've already replaced half the workforce. But when things are going great in the economy, gold shouldn't be moving. It's only when people have a negative outlook on the future that you start to see precious metals like gold rallying. But instead, gold is at all-time highs right now too, and historically, markets don't do this. Either stocks are soaring because confidence is high, or assets like gold and silver are rallying because fear is rising, not both. When both happen simultaneously, it means the market is confused. Different parts of the market are pricing in completely different futures. What all of this means is that central banks are telling you something with their actions. They're saying the era of unquestioned dollar dominance is over. They're saying the world is moving toward a system where no single currency monopolizes reserves. They're saying geopolitical risk isn't a phase, it's the new normal. And they're saying gold, an asset that hasn't played a monetary role since 1971, is coming back. Not because countries are returning to a gold standard, but because in a world where financial assets can be weaponized, frozen, or seized, physical gold stored domestically is the one asset that truly belongs to you. This is the quiet revolution happening in central bank vaults around the world. It's not loud, it's not dramatic. Central banks aren't announcing we're abandoning the dollar. They're just diversifying, slowly and strategically. But when you add it all up, 95% of central banks expect to increase gold holdings, and the message is clear. The world's most sophisticated institutions are voting with their capital.